Let's talk about Spain now. We have things seemingly spiraling there. We've got unemployment at record levels now, or at least since 1994, an astonishing 24.4%. Are we looking at a Spanish bailout?
Well, this is something that we talked about earlier in the year, that markets were getting complacent about the risk after the European Central Bank introduced their liquidity funding program for the banking system. It didn't actually resolve any of the underlying problems, which is enormous government deficits and debt. And the markets are underestimating how difficult it is to deal with your fiscal problems when your economy is outright contracting. And the Spanish economy is mired in a deep recession. Fiscal austerity is pushing it further down, and it's going to impair the ability of the Spanish government to dig its way out. So markets are going through the process of reevaluating the risks.
What are the risks now, Alex?
Well, the risks are the same they were 2 years ago when we started talking about this, Howard. And let's not forget that Spain has been in default 18 times in the last 300 years. It's been in default 7 times since 1800. This state of affairs, financial stringency is not new to Spain.
We didn't have the interconnected markets in those
you didn't have the
days
interconnected markets, and that makes it all the more dangerous because the amount of cross-border debt Spain has between itself, Britain, France, and Germany is almost 600 billion euro. Spain has to roll over 370 billion euro of maturing debt plus its deficit financing requirements this year, in the next year. Are the markets going to absorb that? Spain still has to take a lot of pain on the real estate side. There's about 400 billion of impaired construction debt on the books of the banks. And the larger part of the problem in Spain is that you just don't know, because half of the construction loans and mortgage financing that was extended over the last 10 years went through the CAIAs, these regional banks that are unregulated. They have no reporting requirements, low leverage requirements. It's basically a Wild West type of market. So the regulator in Spain and the ECB don't really know how big the problem is, but you've got a huge hole in all the banks' balance sheets within Spain. Right now, the Spanish banks are borrowing 370 billion euro from the ECB, and that's up in the last 3 months from about 160 billion euro. So the stringency in the financial sector in Spain is reaching crisis proportions right now.
So are we looking at the IMF here, ultimately?
Well, if there was a financial support program for Spain, it would have to involve both the European Financial Stability Fund and the IMF, because, quite frankly, the amount of money that the EFSF has just isn't going to be enough to handle Spain. But Spain also is the line in the sand, because they can't really afford for Spain to default in an uncontrolled way, because we're not talking about Greece anymore. We're talking about a medium-sized economy, and one that has an awful lot of debt held by the European banking system.
Well, Craig, just a quick follow-up question. Mark Carney this morning called for a sizable sovereign firewall in Europe. What specifically does he mean by that?
Well, I guess you should actually ask.
Ask him.
You should ask him what he means.
Sounds like a Hail Mary to me. I mean,
what is a firewall?
He can't have a firewall. He can't. I mean, let's look at the FSF mechanism. The FSF is supported by country sovereign guarantees into that structure. Spain is guaranteeing the FSF to the tune of 93 billion euro. Does it make sense that the guarantee structure is now going to lend money to Spain on the back of Spain's guarantee if Spain needs to be bailed out? None of this makes sense anymore. None of it is making sense. As far as the IMF, this type of situation appears nowhere in the articles as some type of situation that the IMF should get itself involved with. This is not what the IMF was designed for. Will they go in? They probably will. They probably will. Right now, the IMF is lending Greece 3,000% of Greece's quota under the IMF articles.
So is Germany the firewall, and can Germany maintain a triple A rating?
No.
It's a sign of the times you weren't sure what Germany's rating was, actually.
Well, what is triple A anymore?